Listen-only mode.
Good morning, everyone. Scott Earhart here with Insurance Agency Marketing Services. Wanted to thank you all very much for taking the time to join us today on our presentation. I think you'll find what we're going to show today very, very valuable. We are going to take an in-depth look at Athene and one of their brand new indices, the Janus indice. You'll see that it is up significantly year to date and very aggressive strategy that we're really excited about. Great story to be offering to your clients. When we do jump into that, we will have Mr. Mac Campbell from Athene to walk us through that. Really excited to have him with us today. We're very, very knowledgeable in this area. Mac, can you hear us?
I can, Scott. Thanks again for having me today.
Hey, Mac, thank you for your time. We really appreciate you taking some time out for us. Before I hand it over to Mac, I am going to go through a couple of introductory slides and just a couple of housekeeping items. So let's get started with that, and we'll start with the housekeeping items. Probably the most important thing that I will say to you today is our phone number. That number is 800-255-5055. You can see it on the top right-hand side of your screen. If there is anything that we can be doing here at IAMS to help you in the life, annuity, or wealth management arenas, please do not hesitate to give us a call. We would absolutely love the opportunity to be earning your business here at IAMS. Second housekeeping item, polling questions. Throughout the day or throughout the presentation, I will launch 2 or 3 polling questions. If you would please be kind enough to just click yes or no. I certainly would appreciate your participation there. And then final housekeeping item, we're going to throw a lot of information at you here in a fairly short period of time. If you do have questions, please feel free to type them into the questions box. Mac and really the entire culture at Athene, very transparent. They want to do everything they can to make sure they answer all of your questions, and you have as good of an understanding of what's going on as possible. So please type those questions in. We'll do the best we can to get those answered here at the end of the session. That being said, let's get into a couple of introductory slides here. First is our business builders. This is a great slide because all we want to talk about here is helping you to grow your practice and partnering with you to do so. With that being said, we've got a couple of great programs. One is our referral program. Our business here on the wholesale side of the industry is really similar to yours out there in the field, in that one of the best leads we are ever going to get is a referral from you, our valued producer. So we want to make it worth your while to refer individuals to us. When you refer a producer over to us and they pick up any license with IAMS, we're going to send you a $50 check just as a thank you. Where the real money comes in is as your referral writes business, we are going to give you a 20 basis point override on the business they write. We do cut these checks at least quarterly, and I know for a fact that Steve and Charles sign checks for thousands and thousands of dollars a quarter. So it can be very, very lucrative for you. If you have an individual or know an individual that you think might benefit from working with us here at IAMS, please feel free to type their name and contact information to the questions box, or shoot me an email or give me a call with that information. I'll do the best I can to get them recruited over and help you to get on your way to earning some referred producer dollars. Now, my favorite program that we offer, marketing reimbursement, I believe this to be the most lucrative in the industry. Rough numbers on it: every $100,000 in premium you place with IAMS, $200 goes into your marketing reimbursement account. We do not cap your account. We do not tell you the vendors you have to use. We consider this to be your money, and we consider this a great way for us to show you how much we want to partner with you on this and make it really create a partnership in growing your business. So if you'd like to know how much is in your marketing reimbursement account, or if you'd like to discuss how the system works, please let me know. Love to have that conversation with you. Moving on to our new producer builders. If you are new to us here at IMES, or if this is your first introduction to us, you will be eligible for the new producer bonus program or new producer builder program. It's based on production within your first 180 days of being licensed. As you can see on your screen, we do have 3 great levels that you can qualify at, and they're amazing, amazing things to choose from at each level. Cash bonuses, business building tools, personal rewards, all available to you. If you'd like more information on the new producer builder, or if you'd like to know where you stand for qualification on that, please let me know. Back office support. This is the backbone of everything we do here at IMES. All about saving you time, helping you to be more efficient, and basically, to sum it all up, working smarter rather than harder. That's what we're here to do for you. Business building tools and resources. As you'll see on our website and from talking to any of our marketing staff, we've got a lot of great tools and resources to help you manage your time better and be more efficient. Case design assistance, my team here on the annuity end, Mark's team on the life end. We are absolutely here for case design assistance. We have a lot of expertise, a lot of years of experience. We certainly want to help you with any design assistance that we can. Forms at your fingertips. Everything we can get for you, you can get yourself online. Not saying you don't need to use us, but if there's ever a scenario where you need something quick, imesinc.com, you can certainly get there. Submission to commission. I want to take a moment to talk about Amber Williams and her team, our new business staff. We call what they do submission to commission, and I think we have the best team in our industry. We will scrub apps, submit apps, track apps, all on your behalf, so you don't have to waste any of your time calling carriers, going back for details, things like that. We will do that for you. Excuse me, everyone. Sorry about that. We will do all of that for you to help make sure that you're spending your time prospecting and marketing to clients and to future clients, so that you don't have to be buried in the minutia of the administrative stuff. We do that on your behalf. Life and annuity quotes, as I alluded to in case design assistance, that's what Mark and I's teams are here for, and we have a 24-hour or a same-day quote guarantee. You call us for an illustration, it is our absolute goal that that illustration will be in your hands the same day you request it. If it's late in the day, after 5 p.m. Central, sometimes it will be the next morning, but you will absolutely have it as quickly as possible. Sales expertise and coaching. We do have a lot of coaching available for you. I'll get into that a little bit later. And then paperless contracting. You want to talk about something that absolutely helps you to be more efficient. Paperless contracting is available to you. Efficient forms just makes it so much easier to add carriers as you need them. Creative marketing solutions, our creative team. You've probably seen emails from Josh or Tasia. We do have an in-house creative team here. We call them IMES Creative. They are absolute gurus at what they do. If you're looking for turnkey solutions for marketing, if you're looking for agency solutions, business building tools, logos, branding, brochures, things like that, digital solutions for online projects, all can be done out of our office here in Omaha. If you'd like to get into this, just give Josh or Tasia a call. They can walk you through exactly everything that we can do for you. Our website, I've alluded to this a couple of times. We've just revamped it, made it a lot more user-friendly. Single login to everything now, so you don't have to have multiple logins for our linked sites. We did add the sales resource library, which we're very excited about. More and more is being added onto our website weekly. So if you have not gone out to imesinc.com and created a registry, please do so today. You'll find a lot of great tools, a lot of great information for you will be there. So please, if you haven't, imesinc.com. I think you'll be pleasantly surprised with everything we can provide to you online. IMS Wealth Management. I want to talk about this real briefly, but as I do, I want to launch our first polling question of the day. And basically what we're asking here is if you'd like more information on IMS Wealth Management. If you click yes, you'll get a call from Charles or Joan or Mike on our wealth management team just to talk with you a little bit about what we do, what we can provide, and see if it may be a fit for you. The reason why we designed IMS Wealth Management and how we designed it is to be an incredibly friendly RIA to the insurance producer. So just kind of tax on to your existing business, helps you to increase revenue with managed money fees, being able to open up your offerings a little bit more, helps you to improve client retention. We've all had that client where we just help them with a portion of their portfolio, but because we were not securities licensed, could not help them manage their money. And ultimately that puts that client relationship at risk, because if the Edward Jones or the AXA guy wants to try and come after the insurance products, they very well could. So it really gives you increased client retentions. And of course, by that, it will help you to strengthen your client relationships. Now, we did design IMS Wealth Management for organic growth. And what we mean there is for our existing producers. So while we do always welcome new producers into the wealth management arena, if you're an existing producer with IMS and you do not have your Series 65 but would like to obtain it, give Mike Hansen in the IMS Wealth Management office a call. Basically, what we can do there is we've got some great study partners that we can help you get that 65 license done very quickly and do it for you at a very reasonable expense. If you are currently 65 licensed, if you are an IAR, I'd tell you, give Mike or Charles a call. Let them talk to you about our technology and our fees and the platform that we offer. I think you'll be pleasantly surprised if you stack us up compared to your current RIA. We'll save you money. We'll give you better technology. We're really, really excited about the financial package we've put together there. That being said, if you haven't taken the time to click yes or no, I do want to move on from this. So if you would please do so. I certainly appreciate everyone's participation there. All right, that poll is closed. Thank you, everyone, for that. Life and Annuity Academy, this is going to be our second poll of the day, and then I will be done launching polls for a little bit. And what I'm going to ask you here is if you'd like more information about our upcoming Life and Annuity Academies. We host at least 4 of these a year. We are done for 2017, but we do have dates coming out shortly. We will begin in early 2018. What we do in our academies are normally they go Wednesday to Friday. They are all expenses paid. We'll fly in on a Wednesday, have an evening session, full day on Thursday, have a morning session on Friday, and hopefully have you home in time for dinner Friday night. We do bring in about 40 to 50 producers per academy. You will meet IMS staff there. You'll meet the department heads. You'll meet myself. You'll meet Mark Raymakers, who heads up our life team, Amber Williams, who heads up our new business team, Charles Hiring Jr., who heads up our wealth management team. Will all be there to present to you on who we are and what our teams do to help make your life easier, as well as the design of IMS in general, the programs that we offer to help make you more efficient in your business practices. We will bring in some different representatives from carriers. Mac Campbell has been a great partner to us, and Athene has been a great partner to us with many of these. And when we bring in sales reps, we ask them not to just come in and show product and walk away. You can learn about product anywhere. What we ask them to do is bring a sales idea with them every time they present, so that you can see the niches that their products fill and meet, and give you an idea about how to best present that product. So very, very valuable information there. What I find to be the most valuable of our trainings is we're going to bring in at least 4 of our sales coaches from throughout the country. Now, to be a sales coach at IMES, not only do you have to talk the talk, but you must walk the walk. What I mean by that is these are the upper 1% of earners in our industry. These are top producers. And what they're going to do is show you exactly what it is they do in their daily practice that makes them so successful and give you the ability to implement that into your own practice and take it home with you. So very, very valuable information there. Now, we're not going to spend a whole lot of more time on this slide or on this polling question. So if you would click yes or no, certainly would appreciate that. I do want to bring Mac in on this if he can hear me. Mac, you've been a great partner, and Athene's been a great partner to us with many of these academies. Anything that you could add about a life and annuity academy for us?
Thanks, Scott. I appreciate the opportunity to speak on this topic. It's if you've not had the pleasure of attending one of these, I'd really recommend that you do. You know, the IMES folks does a great job of orchestrating and putting on these tremendous events, and of course we've partnered with them on many different occasions in the past, and we plan on doing so next year as well. You know, from my perspective, you know, I love interacting with producers that sell the products, and it's a great opportunity to meet a lot of new people. From your perspective, it's a great opportunity to kind of kick the tires at the insurance company. You know, at Athene, you'll hear from from myself, from my team, from the president of the company. And as Scott mentioned, we're very transparent with the way we operate and how the products we sell, and passing the information along to you. We hope you get that from these meetings. I think more importantly, though, as Scott mentioned, you know, the sales coaches they bring in, as you look at the agendas for these various events, I would say the majority of the speaking is actually done by producers like yourself, successful people. You know, the great thing about this business, and I've traveled all over the country for the last 20 years, and there's not one way to do this business and be good at it. And IMES brings in multiple people across the entire country to share with you what makes them successful. And then, of course, hearing from one another, I think, is a very valuable experience as well. So I'd click yes. Again, if it's up to me, it's a great trip. It's a great informative trip. And anyway, I'll leave it at that, Scott. Thanks.
Hey, Mac, thanks for your kind words there. We do appreciate it. That being said, we're going to close down this poll and move on. So if you haven't clicked yes or no, certainly would appreciate participation there. Thank you, everyone. IMES Marketing Summit coming up in February, which is, I can't believe we're almost to Thanksgiving here. Lord knows where 2017 went. We are going to finalize attendance by the end of the year. So if you have interest in the Marketing Summit, if you'd like to learn more about it, just let me know. We will be at the Boulders Resort and Spa in Arizona. I've had people laugh at me because I speak so glowingly of this trip. I'm really excited. The Boulders is my favorite resort in the continental United States. It is one of the most unique places you'll ever go. If you're a golfer, amazing golf. If you like spas, probably the best spa I've ever been to in the entire world. Accommodations are second to none there. So we're really excited about this event. Again, if you'd like details on it, please let me know. Super excited about it. And that brings me to the end of my slide. So Mac, I'm going to give you control of it now.
Okay, great. All right, Scott, if you would just verify for me that you can see the slide and hear me okay?
Yep, I can hear you and we can see the slide. Thank you, sir.
All right, wonderful. Well, thanks everybody for joining us. I'll take about the next 20, 25 minutes to kind of go through my subject matter here, and we'll get you back to your day. You know, what we're going to discuss today is one of the more exciting things that I think I've been able to talk about from Athene in recent memory. You know, as you look back to the beginning of 2017 and all throughout the year, there hasn't been really a ton of innovation or new product in the business. I think the DOL sort of froze insurance companies for a while there. Of course, we've heard there's a delay coming here, so that's good news for everybody. But All that said, we launched a brand new index a couple of months ago that we're going to discuss today, and we attached it to our best-selling accumulation product as well as one of the industry's best-selling income products as well. And we'll talk about how it works, why we chose it, who we partnered with, and why we're excited about it moving forward. What's really interesting and actually amazing, I think, is if you roll back the clock 5 to 6 years ago, Q1 of 2011, there wasn't a single alternative index or a volatility controlled index in the marketplace, believe it or not. Now, I feel like every month that goes by, we have another company coming out with a new index or partnering with somebody, and it's roughly 30% of the marketplace right now, which is astonishing in just 5 years. But that tells us a couple things. It tells us that, this is where the value, I think, lies moving forward. As we look at interest rates still very low, it's tough to sell a traditional cap strategy when the cap is 2, 3, 4%. Insurance companies are designing these new alternative volatility controlled indices because that's really the best way in today's interest environment that a client can get some decent value. And a lot of these have a lot of moving parts. So I'm sure you've heard the expression, do you tell the client how to build the clock or just what time it is? We're going to build the clock during the next 20 minutes or so. And I will step back from time to time to tell you what time it is as well, because ultimately, you've got to sell this to a client or ideally feel confident in yourself first. And again, that's kind of why we're going to get into the mechanics of the slide. So we're going to get into this notion of the wisdom of the crowd a bit more in a moment. But we were excited to launch this again a few short months ago, and we actually have live performance for this whole year, which we'll talk about as well, that we're equally as excited about. As I mentioned, we attached this to our Athene Ascent Pro product, which is the income product that we have, and then the Performance Elite, which is our industry-leading accumulation product as well. We're not going to get into the mechanics on the product, how they work. I will talk about what the rates look like towards the end. But again, if you have questions on income or accumulation, you can call the folks at IAMS or my sales team to give you more specific information on the product available in your state. The name of this index is the Janus SG Market Consensus Index. Now, we'll get into what exactly all that means in a moment. That's kind of a mouthful. We simply call it the SocGen Index for short. That's just one of the investment banks that we partnered with. But before we kind of get into how this thing works, let's discuss who these partners are. Then we'll talk about how this thing works and, again, why we're excited about it. The two investment banks that we chose to design and help us manage this index on the products, first is Societe Generale, and then the next is Janus Henderson. If you spend any time in the registered marketplace, I think Janus comes to mind almost immediately. They're one of the most reputable investment banks across the globe. And Societe Generale, well, it's not a household name in this country. It is one of the largest investment banks globally, and that's kind of where we're starting next. They've got three parts to their business: retail banking, international retail banking, and corporate and investment banking, and that's where we kind of fit into the puzzle there. They're AAA rated across the board in terms of financial strength, over 31 million clients, almost 150,000 employees across 67 countries worldwide. And in the United States, they've actually been here since the late 30s and have over 2,500 employees located in 9 different states. So a very big footprint in this country as well as across the globe. Janus Henderson, again, one of the more reputable investment banks in this country for sure. The average years of financial industry experience their fund managers have is over 2 decades. So we're very happy and proud to be able to represent with these two strong firms to design the index. And I think you'll like what you see in terms of the design as well. So that's who we partnered with, and I think you'll agree, very reputable. They run themselves with integrity, a lot of respect there across the management teams as well. Let's get into how this thing works a little bit, but before we get into the mechanics, let's talk about the concept, this idea of the wisdom of the crowd. And I kind of want to share 2 stories to kind of bring the perspective as to what we mean when we talk about the wisdom of the crowd to help drive growth here. Towards the turn of the 19th century, there was a British aristocrat named Sir Francis Galton, and he was a mathematician or a statistician by trade, and he attended a carnival or at one point, and actually brought with him a prize-winning ox, believe it or not, and he wanted to see how close or how accurate the carnival attendees could be in guessing the weight of this ox. And so he put the contest out there, and he had hundreds and hundreds of guesses, and there wasn't a single person that got it right. But again, the mathematician in him kind of took a step back and said, well, I wonder what would happen if I were to average all of the guesses. And he actually came within less than 1% of the actual weight of the ox, which is very interesting. Again, this idea that the wisdom of the crowd is a lot smarter than any one individual. But that's an example that kind of dates back in history. You can Google, there's all sorts of neat examples of this idea of wisdom of the crowd. But one of my favorites in more recent times involves the show So You Want to Be a Millionaire. And this is a trivia show. You've likely seen it. It's still on TV, I think, at some point. And, humor me for a few moments here, but let's assume that you go on the show and you're a contestant. Now, I would imagine if you're on the show, you're probably a trivia buff. You got to know what you're talking about, or else why would you even bother getting on the program? Now, the good news is, let's say you're taking these questions from the host and you don't know one of the answers. You have a couple of lifelines, I believe they call them. One is you can phone a friend. Now, also, I would imagine that the friend you're going to phone knows what they're talking about as well, right? They're not just some guy off the street. This is someone who also knows a fair amount about trivia. What's interesting is that only works roughly 60% of the time. You would think by calling an expert, quote unquote, trivia person, that it would work a lot more. But let's look at another lifeline. There's another one called Ask the Crowd. Now, again, these people are simply audience members. They might be trivia people, they might not be. Heck, they might just be walking by the studio and ask to, for a free cup of coffee, come in and applaud and be part of the audience. What's interesting, though, is that when the contestant asks the crowd, they give the right answer over 90% of the time. So again, I'm not suggesting that our crowd is a bunch of average people in an audience. Very far from it. We'll get to that in a moment. But clearly, I think it shows the wisdom of the crowd, why that's impactful. And we kind of took that same concept in using and designing the index. And that's really the part that Janice brought to the table, is the concept and the construct. So let's get into the actual mechanics of the index in this idea of the wisdom of the crowd in this market consensus. So the index itself is made up of three distinct components. There's this market consensus strategy in the middle. And again, that's the part that uses the wisdom of the crowd concept that Janice brought to the table. There's a layer of volatility control that's pretty common in the industry these days with uncapped indices, as we discussed earlier. That's a part that SocGen brought to the table. And in addition to that, there's actually a performance control mechanism which helps us deliver it to you and the customer with much higher rates. Again, that's also a SocGen piece there. We're going to get into each one of these components, and then we'll kind of get into the performance and actually how this thing looks on the products as well. So we'll start with this market consensus strategy. This is what drives the index growth. And what we do is we take a three-step approach here. On a quarterly basis, we're looking at the 500 largest cap U.S. equities at a given moment. Now, if I step back and I ask you, what did I just describe when I said the 500 large cap U.S. equities? I effectively just described the S&P 500. So we look at the S&P 500, and we take the 250 equities in the S&P 500 that are the lowest volatility equities at that given moment. And we do that on a quarterly basis. Now, what's interesting is that we don't typically see a lot of change in that group. Typically, if you have a low volatility equity in the S&P 500, it tends to stay low volatility. And there's, the high vol ones tend to stay high vol as well. We may lose a few around the edges, but by and large, on a quarterly basis, we're dealing with the same group of 250 large cap equities. Again, very low volatility there. Now, on a monthly basis, we go to our crowd. Our crowd happens to be hundreds of industry experts, industry analysts, and their only job is to rate the equities that are part of our universe that we just described, those 250 stocks. Now, what's amazing is that the crowd, these industry analysts, these experts, are remarkably accurate when looking at low volatility stocks. So on a quarterly basis, we're looking at the universe, the 250 stocks. On a monthly basis, we ask our crowd, our industry experts, to give us what they think on these equities. And based on their opinions, we allocate accordingly the different weighting. So as an example, if the market consensus on one equity says that they love the price target, it's got low volatility, we're likely going to allocate a lot to that position. Now, there might be another equity that has a great price target, for instance, but maybe the volatility is a little higher. That doesn't mean we don't like that. We just don't like it as much, so we're going to allocate a little less. So again, there's a lot going on there to kind of develop this strategy, but we're basically taking the lowest volatility portion of the S&P 500. We ask the experts what they think of those positions, and we allocate accordingly. That's what we're doing. We're basically trying to achieve S&P typed returns with much less volatility. That's the whole point of this index. So that's the market consensus strategy part. Now let's talk about the volatility control. Most, if not all, uncapped indices today employ some level of volatility control. Our target is actually 20%, which if you survey the marketplace is the highest volatility target in the business. It allows us, in addition to having a high target, to essentially increase or decrease our exposure when volatility spikes above or below that. So if volatility is relatively low like it is now and has been for the better part of this year, we have the ability to increase our exposure to the index by up to 400%. Now the flip side is also true. If volatility starts to spike and get very high above our target, we can actually reduce our exposure to the index, so we're not going to take as many hits on the up and down performance of the potential on that given time. So effectively, you get the exposure when you want it, when things are smooth, and you get your exposure reduced when things are choppy. Pretty straightforward there. So the last piece, as I mentioned, is the performance control mechanism. Because we're able to leverage up in periods of low volatility up to 400%, like we said on the last slide, we do have to limit the upside on a monthly basis so that we can give it to clients with better rates. So if you're familiar with a cap, this is kind of like that. In any given month, the index itself can't do any better than 4% on the upside. Of course, there's no cap on the downside. I'll show you a website in a moment here that kind of shows you why being capped at 4% is actually a good thing. Now, again, remember, if volatility is low, we can increase our exposure by 400%. So that's why we need that cap in place, so we don't go completely bonkers with the options prices. Now, there's a lot of moving parts here. I don't want you to think that the client's going to really see any of this. This is all, we're talking about things that happen at the index level here. All the client is going to see on their statement each year or every 2 years, they're going to see a starting value, an ending value, and then they're going to earn a participation rate on that growth if there is any to be had between the starting point and the ending point. Again, this is building the clock here. I want to make sure you guys understand how this works, but ultimately your client's just going to see hopefully S&P type returns potentially with much less volatility. So what I'd like to do before I kind of show you how this looks on the product itself, I'm going to step out of here and actually bring up the website that we've designed for you and the clients, and it's janissg-mc.com. You can call the folks at IAMS or my team to get that more clearly for you if you don't have it written down. But this is a client-approved website. You know, Scott mentioned the word transparency as he talked about our organization. That's what we strive to be when we answer questions, when we have products, when we have indices like this. You know, a lot of these uncapped indices are fantastic or sound great, but the challenge is there's not a lot of place to get information about them on a daily basis. So in our view, what's the point? So many of our indices have websites where clients can go and literally track how they're doing. They can learn about how the index works. They can see the performance. They can look at the mechanics. This one here, we have a great video you can share with your clients that's very easy, talks about how this index works and drives value for them. But what I want to do here is show you the performance year to date. Now, I'm not going to show you this to kind of promise you that this is what it's going to do every year. But what's interesting is, I think we can agree that the year in the market so far this year through November, certainly through yesterday has been relatively smooth. Yeah, we've had some crazy news stories for sure, but that really hasn't impacted the market a lot. So this is an ideal market for growth. I think with indexing, we've got consistently good growth with very low volatility. Now, I think ultimately when you're selling an indexed strategy to a client, if the market's up, you'd like to show your clients some growth. If you're selling a cap strategy at 3 or 4%, that's all they're ever going to get, 3 or 4% in an up market. So this is an index, I think, that's specifically designed to give your clients growth when growth in the marketplace is actually happening. And frankly, if we're going to pair this thing to an indexed annuity anyway, where we can't lose anything, why not try to hit a double or a triple every now and then and really drive good value for your client's income or accumulation? Now, before I show you the performance, you'll likely notice the one thing I have not mentioned as I've discussed this index is cash or bonds. This is the only index in the marketplace today that does not use any bonds or cash to potentially water down some of the performance. This is a 100% equity strategy. So again, if we're using indexed annuities where we can't lose money, why not use a strategy that is 100% equities to drive growth? So let's take a look at the performance here year to date. You can actually go back and look at what this would have hypothetically done in prior years as well. But notice that the S&P 500 year to date is up roughly 14.6%. Now remember, I said that we're capped on our index on a 4% monthly basis. Now you'll notice that there hasn't been a single month this year where the S&P has actually reached 4%. It came close a couple of times. It came close in February. But notice that our index, the Janus Market Consensus Index, is actually capped out not once, but 4 times: January, February, September, and October. Year to date, we're up 25, almost 26%. Now, again, I can't promise that's going to happen every year, certainly, but if the market's up and volatility is in check, this thing will perform for clients. So I want you to remember that figure. So call it 26% to make the math easier in a minute. So we're up 26. The S&P itself is up about, call it 14.5. So let's get back into the presentation here, and we'll talk about how this thing looks on the products that we have that you can sell. Again, we've got an income product in the Ascent Bonus, and we've got accumulation products in the Performance Elite. So we'll start with the accumulation side, and we've got 3 different versions of the Performance Elite: a 7-year, a 10-year, and a 15-year. Again, I'm not going to get into the product mechanics. It's a great product, has an ROP feature to it, a big bonus if your clients need it. Talk to the folks at IMES to get more detail there. But let's look at the rates. We've designed on each of these products a 1-year and a 2-year version of the Janus SocGen Index. And you can see, if we look at the 7-year product, for instance, the 1-year participation rate is 45%. The 2-year point-to-point is actually 75%. So let's just assume we'll take the low one. We'll take the 45% 1-year point-to-point. Now you can see here, you can see the worst it's done over the last 10 to 20 years, the average return, and the best. But if we look at those year-to-date numbers that we discussed, again, we talked about a 26% return. And if we took roughly 45% of that, that's an 11.7% return in a fixed annuity. That's powerful. Now, again, if you have a 2-year point-to-point, you can see the rates are even better. I love the idea of a 2-year point-to-point. I just don't like the idea that we have to wait 2 years to see something. At Athene, we actually let your clients participate in 2 different 2-year strategies in alternating years. So you can actually get 2-year rates potentially every year, and I'll explain how that works. At issue, put 50% of your clients' money in a 1-year strategy, the other 50% in the 2-year strategy. On the first anniversary, the 2-year strategy is still going to be working. That 1-year strategy, though, you'll have to choose a new strategy. At that point, you can select a different 2-year strategy and effectively have 2-year rates every year. So again, call the folks at IMES to get more detail on that. We have client-approved pieces to help tell that story for you. Let's pan down, though, and look at the Ascent 10 bonus. You'll notice that the participation rates are quite a bit lower. The reason they are is because we're driving income here. Don't look at this as an accumulation play. Look at it from an income perspective. So let's take the worst case scenario here. We'll take our lowest rate at 30%. And again, we'll take 30% of that 26, which again is roughly, so we'll call it 7, call it 8%, which is still pretty decent. But what we do with that 8%, if you chose the income growth option that uses the index to help drive growth, we actually double what you earn in the index in a given year and then stack it on top of the guarantee. Now, the guarantee for the roll-up is 7%. So if we're doubling 8, that goes to 16. We're stacking it on top of the 7. That's 23% roll-up in a single year for income. I have to tell you, if you're looking or selling income products, particularly ones that are using an index to drive growth, this is, I believe, the best performing index to use with the product to provide income for clients. If your clients have 4 to 5 years or more to wait before they need income, I think this is the place to get it. I think this will drive growth better than anything you can see in the marketplace. You know, what's interesting is I've had a lot of conversations with advisors over the years, and particularly as of late, they're saying, you know, Mac, I love the idea of this index. It sounds awesome. The performance looks great, but geez, you know, 45% participation is low. And like, yeah, I've got a strategy here that gives me 100% participation. And try not to fall into that trap. Here's what I would ask. If you see a strategy in the marketplace that has 100% participation, find out what it's participating in. You know, getting 100% of something is great, but what if it's only 5%? What if the index is doing 5 or 6% for the year? But again, all you're really doing is getting a little bit better than a cap strategy at that point. Sure, our participation rates seem lower, but when you look at how this index performs, I think it's a home run. And again, when you look at this thing on top of an indexed annuity, I think it's just a win-win for everyone involved. So Scott, with that, I'm going to turn it back to you. We've got about 15 minutes left here, I think, in the hour. We covered a lot of information in a short time frame, but I'm happy to take any questions at this point if you'd like.
Fantastic. Thank you for the presentation, Mac. I am going to take control here now and launch our final poll of the day. If you liked what you saw from Athene and you're not already hooked up with them, if you would please click yes on that. We can certainly send you out product information and licensing information, as well as commission information on all of the Athene products. We will get that emailed out to you hopefully today, if not tomorrow. So if there are any further questions, questions box is still open, so please feel free to type them in. Mac, I did have one really good question come in that I definitely want to hit on. You spent some time on the hypothetical index movement chart there comparing the different products. An individual noticed that the par rates on both the 7-year and the 15-year were the exact same. However, the rate of return that we're showing was different. Can you give us a little insight into as why that is?
Bear with me a second here. Yeah, and I believe I'll have to look into that more closely, but I believe what we're doing there is that's the performance on the product itself. So I think we've got different bonuses there involved in the different products, and we'll take a look at that. But the other thing you have to consider too, I think the primary reason too, when we're looking at these, the rates look different because the durations are different, right? So we've got a 15-year product versus a 7-year product. What the model regulation effectively makes us do is back test really kind of how the product is designed. So if we got a 15-year product, what we're not going to do is back test every 7 years because the client's got 15 years of surrender charges. So that will impact, I think, the returns in some instances. Whereas on the 7-year product, we've got really chunks of 7 years effectively that we're looking at. Does that make sense?
Yep, it absolutely does, and I completely agree that the NAIC model reg is more than likely why that is. Yeah. Looks like we've got a couple existing producers on the line with us. So one, thank you for your production. We do appreciate your partnership. But the question's coming. They've got some individuals that have written the PE and probably the Ascent. I shouldn't just assume it's the PE previously. Will the Janus strategies be added on to existing allocation options upon renewal? Do you know, Mac?
Not at this time, everyone. It would really to to build that into the existing block would be very cost prohibitive, and ultimately I think it would affect the rates we can deliver for the new cases that are written. So this thing was launched, I think it was back in August or so. So anything that was sold since then will have the ability to use this index, but the existing business on the books will not have it available.
Fair enough.
The good news is, though, we have a lot of other indices there that I think are very compelling in addition to this one that we didn't talk about today.
Oh, absolutely. I mean, Athene offers the S&P 8% volatility, the daily risk control that Mac and I were talking offline is returning great. Also, the BNP Paribas, the MAD 5, doing very, very well. I've seen actual client statements with those things just crushing it right now. So Athene has a lot of great options out there for you as far as accumulation goes and for your clients, rather.
Yeah, Scott, if I may, I'll make one quick comment on that as well.
Jump in there.
You know, I love talking about the SocGen. It's the newest one. I love the fact that it's got no cash or bonds. I love the performance for sure. But again, looking back at our portfolio, we've got a lot of different indices for you to choose that are actually performing quite well. In fact, we try to track on a monthly basis the universe of alternative indices and how they perform off one another, so we can kind of see where we stack up. And what's interesting is through October, there are actually five. Well, I don't know what this says. Only 5 indices, alternative indices, that are actually beating the S&P. Now that says something. Again, the S&P is up 14, 15%. So that's not, if you're not beating the S&P and still coming in at 10 or 12, that's still a decent year for a fixed annuity strategy. But just know that of the 5 indices that are outperforming the S&P right now, Athene owns 3 of them. So, to me, what that said, and of course this is the number one. What that says is that we've got strategies that are designed, multiple strategies, frankly, to give your client growth when markets are healthy. And I think that's what you look for in a good indexed annuity strategy.
Absolutely. Absolutely. Had a question come in late from my boy Brian out in California. Brian, thank you for getting up so early to join us and for paying attention. We do appreciate that. Question is, Mac, most volatility control indices right now are parking a lot of money into their cash component. Can we follow the Janus on a day-to-day to see what their mix is, for lack of a better term?
Yeah. In fact, I should have showed you that on the website. But yes. So again, I want you to. We need to be clear on something. I think that there's a general misconception. I'm not implying, by the way, that the asker of this question falls into this category. But I think generally speaking, I think there's a huge misconception in the marketplace that when we have a volatility control index that's got bonds and equities or cash and equities, and money goes back and forth, clients' money is not doing that at all. But that is simply the client's money is at the insurance company, invested in their general account. And what we're doing, though, is using an index, and we're applying a formula based on that index to trigger growth on the client's money. So with that in mind, I mentioned before, we don't have a cash or bond kicker. What we do have, though, is the ability to increase or decrease our formula, effectively our exposure to the actual index. Now, when you go on the website that I showed you, in the performance section, there's a exposure chart. And you can actually roll your mouse over the chart and see, are we 400%? Are we 50%? And it's actually very interesting because we look at that over the last 10 years. And as an example, in 2008 and 2009, if you were to click on those years, you'll find out that we're exposed hardly at all to the index because volatility was just off the charts. But what's also interesting is the reason we've been able to get such great growth this year is, again, because volatility has been in check. So if you were to click on the last several months, you'll find that our exposure is actually up to 400%. Because again, if the markets are not volatile, why not give ourselves more exposure to get more growth? And that's what we've seen happen. So yes, you can absolutely track that you can see the values on a daily basis. I think our exposure is tracked every week, but you can certainly look at that on the site as well.
Absolutely. And if anybody needs a link to that website after the webinar, when I call to follow up, just let me know. I will be more than happy to email you out a link. Athene and Janus got together and created a really really nice, friendly website where you can see everything that Mac alluded to, and I can get that to you pretty
Yeah,
easily.
see, I'm sorry. One more quick comment. I apologize to talk over you there.
You're great.
The question is, I really like that question, and so one other, I guess, closing thought on that. You bring up a good point. There's a lot of volatility indices right now that have a cash or bond kicker that do have quite a bit weighted into that strategy. What does that tell you? That tells you when the market is up and when the index is up, your client's performance will be watered down because there is a lot of money in the fixed cash or bond position. So again, for my money, if we've got clients in an indexed annuity where they can't lose a dime anyway, why not choose an index that doesn't have cash or bonds in it to water down growth? Pick an index that actually will show them real growth. Now, does all the money belong there? No, probably not. But I think, puts them in here, puts them in the fixed account, puts them in the BNP. You got a lot of choices here. So Scott, with that, I'll get off my soapbox now. Sorry about that.
Hey, it was a good soapbox. I appreciate all the insight. That being said, um, I think that brings us to the end of our presentation. I don't have any more questions, Mac. So I do want to thank you, Mac, for your time. I want to thank everybody on the presentation today for their time. Mac, any parting words for the group before we get out of here?
Well, just thanks again, Scott, for the partnership with IMES and everyone on the phone here. Again, if you've not taken a look at us, please do. Look forward to working with you, and call the great folks at IMES for more information on what we discussed. And other than that, just have a great day.
Absolutely, absolutely. Thank you, everyone, for your time today. I know that 55 minutes with us is 55 minutes where you're not out prospecting for new business, so we do appreciate your time greatly. I look forward to speaking with each and every one of you in the near future. Go out, have a great sales day, and we will speak to you soon. Thanks, everyone.